I do think this is true, just as somebody who knows these people and has met the president a couple of times on these issues. President Trump, I think it's important to remember, he's not an ideologue.
Okay.
He's not an academic. He's a commercial real estate guy from New York. So he's always negotiating.
Okay.
Right. And from his point of view, tariffs are a negotiating.
Okay.
They're a deal point, right? And from his point of view, the U.S. has the biggest consumer spending base in the world, and why would you give that away for free if you didn't have to? What would be harmful, and what I would argue if I were in a position to be advising them, I would really try to stay away from broad-based tariffs on everything. That would be inflationary. If you're just putting tariffs on things that where there's another alternative, it doesn't necessarily have to be inflationary. It could just be a shift in relative prices.
Hello, I'm Daniel Tudor. Welcome to this SamPro.TV Global Money Talk special interview. Today I'll be talking with a guest whose footsteps echo along both Wall Street and Main Street, and that's Mr. Jason Trennert. He's the founder and CEO of American research firm Strategas. Okay, first of all, Mr. Trennert, welcome to Korea.
Oh, it's my pleasure to be here.
Okay, is it your first time to visit Korea?
It's my second time.
Your second time,
but I hope it's the second of many times to come. I'm speaking at the Samsung conference tomorrow.
So I was going to ask you. Obviously, it's a very, very interesting week in your country right now.
You bet.
So, what are you doing here?
It's funny. I was at, and we actually have our conference. We have institutional investor conference in London next week, and then I was asked to speak at this conference. We're trying to build a business here in Korea, and it was a great opportunity, actually, I thought, with the election to be here, because this is so much of what we do. A good portion of what we do is driven by policy at our shop, policy research. So we're trying to expand our footprint in Asia and in Korea specifically. So we thought this would be a very good week to be here.
Fair enough. And this is your first media interview in Korea, isn't it?
Yes, it is.
Okay.
Yeah, so happy to be here.
Yeah. So for the benefits of our viewers who might not know about Strategas, can you please tell us, give us a rough introduction to your company?
It's in the old days on Wall Street, they would have what they would call research boutiques, and it was very common to have research firms that didn't have investment banking. That all went away in 1970. A lot of it went away in 1975 when they went to negotiated commissions. But we are a research boutique in the traditional sense, in that we have sales, we have trading, but the focus is on research. Our clients are institutional. We have them in 45 of 50 states in the U.S. and 25 foreign countries. And the focus is all macro-oriented for equity investors. So it's portfolio strategy, it's macroeconomics.
So quite a top-down.
It's very top-down. Policy, which is really Washington regulatory, technical analysis. We spend a lot of time on that. Fixed income strategy. So all the big major macro disciplines really in one place, but it's designed to help investors make money.
I understand you have an asset management side as well. Is that correct?
Yes, we do. We have 3 ETFs: SAMT, SAGP, and SAMM are the symbols, and they very much are driven by our themes and the things that we're discussing in our research for our institutional clients day to day. So it allows the average investor to essentially invest alongside our research.
Okay, I think a lot of Korean retail investors would be curious to hear about one of your ETFs in particular.
Well, I'd say there's two that could be very interesting. One is the policy Strategas global policy portfolio, and that's really focused. Sadly, it's focused on lobbying, and I say sadly because I'm a very free market person, and I wish lobbying didn't work as well as it did. But the head of our Washington team is a fellow by the name of Dan Clifton. He's a great policy analyst for Wall Street. He's the best Washington analyst for Wall Street in the United States. And he has a proprietary way of looking at how much companies are spending to lobby Washington politicians.
There's a lot of healthcare in there.
It's everything. The thing is now, Washington's influence over industries is much longer than it's ever been before. So 10 years ago, none of the Magnificent Seven or none of the technology companies would have been in a portfolio like that, but they are clearly becoming much more involved in making sure their interests are well sought after in Washington, D.C.
I suppose they're so huge now that they feel like they have to protect themselves.
Yes, well, it's
being broken up. Or
yeah, it's exactly right. It may be a little bit less with the new administration coming in, but it remains to be seen. There may be there's different lobbying. There'll be other lobbying, but with the Magnificent Seven in particular, I think you're right. I just think it's the size of the companies, their influence, and both Democrats and Republicans want to regulate them for different reasons. Republicans are a little more focused perhaps on child safety, and Democrats are more focused on things like disinformation or misinformation, or things along those lines. So, but at the same time, there's more regulatory scrutiny on those companies than there have been in the past.
I see. I think most of our viewers will be interested in your call on U.S. markets. Because, as I said before, there's a lot of retail investor interest now in U.S. here, particularly I think the past decade or so. The S&P 500 has raced ahead. Korean stock index really goes nowhere, and I say that as someone who's personally been invested in Korean stocks and crying into my kimchi. You said a couple of weeks ago, I think on CNBC, you wouldn't want to be short on this market, i.e. the U.S. market right now. Now, obviously, for a very the reason of the election, we had a jump the other day. But generally, the market has been going up since you made that call. What's your overall view on U.S. stocks right now?
Well, when I made that call, I would say it's generally driven by the fact that there is something called a presidential election cycle, which is to say that stocks almost always go up in election years, especially when an incumbent is running, and that's true of Republicans and Democrats. It doesn't matter. Whoever's running tries to, as we say, grease the skids for their reelection by spending money or trying to make the economy look as strong as possible. So, and I would say the average return during an election year like that for the S&P 500 is a little less than 15%. So that was one of the reasons why we didn't want to be short. I would say the other reason why it's hard to be short right now is that the Fed is easing. And I'd also say that regardless of who's president, we're probably still going to be spending more money than we take in. So there's not, at least not yet, there's not a lot of signs of fiscal restraint. So fiscal easing and monetary easing make it hard to be short.
Yeah, I was going to ask you about government spending and deficits. As an outsider to the U.S., it seems, my country's the same, really. I mean, we always spend more than we have. You tax this much, you spend this much, and that's just going on forever. I mean, do you see any change in that? I mean, are deficits going to continue to balloon in the U.S.? And also, does it matter? I mean, the dollar seems to be very strong.
See the dollar, though. I think it matters a lot. Personally, I would think over time, and I think it matters especially for the average person, because wealthy people, generally speaking, they don't necessarily mind inflation because they're wealthy, and then they have ways in which they can hedge themselves, either by buying financial assets or buying hard assets or other ways in which they can almost take advantage of it. The average person, on the other hand, has a very difficult time, obviously, with inflation. Their purchasing power goes down. That was especially true when you have inflation and you also have a lot of manipulation of interest rates by the part of central bankers. So you have a situation in which you're not necessarily getting the interest rate that you would deserve on your savings, and yet inflation still moves higher. I'm hopeful. I will say that President Trump is one of the few people I've heard that's actually talked to, and this is via Elon Musk, talked about actually cutting government spending, not just cutting the growth in spending
overall,
but cutting it. The hard part is that so much of the budget, about 80% of the budget in the U.S., are things that are almost impossible to cut.
Sacred cows.
So sacred cows, Social Security, Medicare, Medicaid, veterans benefits, interest on the debt, defense. That's about 80% of the budget, and those are essentially our national retirement plans, our national healthcare plans. So those things are hard to cut. So it's hard to cut a lot of the 20% that's remaining to really put a dent in the deficit.
I understand that you view inflation as perhaps miscalculated in the US, or calculated in a way that doesn't reflect how ordinary people may suffer.
Yeah, I
People's
think
standard of living.
Yeah, I grew up a very middle class. I mean, this has become a joke now, but I mean, I grew up. I was born in 1968, and I grew up in the 70s to very middle class people, and I remember, putting on. First of all, we didn't have air conditioning, and then certainly, putting on the heat in the 70s. Over 68 degrees was like a big deal. You had to get special dispensation from my father to do that. So earlier this year, there was a certain point at which where there was a big debate going on about inflation. And at one point, an academic group came out and said, we're calling this supercore inflation. And supercore means we're going to exclude food, we're going to exclude energy, and we're going to exclude shelter. And I don't know about you, but Daniel, but those things are
pretty much essential.
Those are pretty core for most people. So we went the other way. My colleague Don Rissmiller and I went the other way, and we just looked at the elements of CPI, just the things that people must buy, regardless of their station in life. Or so it is food, it's energy. It's shelter, it's children's clothing, it's insurance, it's utilities. And that shows a very different picture, which is to say that it largely shows that the average person's standard of living has deteriorated, that wages have not kept up with inflation. And so the thing I think people sometimes forget, especially wealthier people, tend to forget is that for most people, inflation is cumulative. Which is to say that the rate of change doesn't matter. It's the level of prices that makes a difference. So if prices are up 20% and your wages are only up 15% over a 3.5-year period, you feel that.
Poor,
you're poor. And I think it was undoubtedly an issue in this presidential campaign. Whether it's fair or not to blame President Biden, we could debate that, but I do think it was absolutely an issue in this campaign.
It is interesting because in a lot of the international press recently, there's been a lot of talk about the U.S. economy's roaring ahead. The Economist, my former employer, they called the American economy bigger and better than ever very recently. And does it not feel that way to you?
I think I think you do have to. So the good news is that we do have innovation that is probably unrivaled. I would argue. I don't want to be ethnocentric about it, but I think you do have. America is a pretty unique place because you have the innovation of Silicon Valley, you have natural resources, abundant natural resources, and then you have very deep capital markets, all in one country. So it is exceptional. Having said that, I would also say that we've been running budget deficits of close to 7% of GDP when the unemployment rate is only 4%. So I would say there's a certain extent to which the COVID era spending has made the economy seem a lot stronger than it ordinarily would be. And again, it goes back to your question, does it matter? In my opinion, it will matter eventually. As we say, we're bullish until the bill comes due. And eventually the bill is going to come due, in my opinion, through higher long-term interest rates because we're spending money we don't have. Just the issuance alone of treasuries in the U.S. is very meaningful.
How do you view the U.S. stock market now? I think a lot of investors here, and myself too, you look at, say, the S&P 500, and I always feel I'm chasing it. Like, should I invest? Oh, it's quite... the valuation's quite high in the U.S. market compared to, say, Korea or others. but it keeps going up, and it keeps seeming to do very well.
Yeah.
I mean, where are you long term on U.S.
Listen,
stocks?
I think, to be very candid, with the valuations where they are today, it's really hard. If you're looking out over a 5 or 10 year period, it's hard to see double-digit types of returns. I mean, it's almost always difficult to do that, but it's particularly difficult to do that now, given where we're starting. Having said that, there are an awful lot of companies, specific companies in specific industries, that look very, very interesting to us. I think the nuclear industry, as an example, is something that is going to get a lot more attention in the U.S., especially with President Trump winning. Artificial intelligence requires an enormous amount of electricity, and it's very difficult to get there with traditional sources of energy, right? So, and there will also be a de-emphasis on renewables now in the Trump administration. So, nuclear could be one of those areas that might be interesting. Financials would be another industry in which. So the market
bank stocks rallied recently, didn't they?
I mean, I think that's a big part of the Trump economic agenda is deregulation, and one of the things that's been a hindrance, really, is, first of all, the cost of regulation of the. I run my own. Strategas is a broker dealer. We're only a 55-person firm, but it is highly regulated and it's expensive. First of all, the financials will benefit from lower costs of regulation. I think also there's been a lot of, in the Biden administration, there's been a lot of scrutiny of mergers and acquisitions. Through something called the Federal Trade Commission. And so that is going to ease meaningfully in a Trump administration. They're not going to be scrutinized as much. And so there'll probably be more deals. I think there'll be more deals that get done, which should benefit.
Positive
positive for the financials. Positive for certainly investment banks or M&A boutiques.
Sure. There's a lot of talk of Trump trade, the Trump trade in certain asset classes. Now, I was reading a little about you before, and it seems that this "Tina, there is no alternative" is a phrase that you've popularized in the past. But a couple of years ago, you kind of said, "Well, that's dead now, and there are alternatives." Does Trump mean anything for those alternatives?
I think. Listen, I think, to be honest with you, given my views of inflation, and which I think a second wave of inflation is quite likely. I think, personally, I think equities, it's hard to find another alternative. I do think hard assets, though, are something that are under-owned.
So
I don't want to say it's not so real estate, gold, commodities, those are things that, Lord willing, we don't have another wave of inflation, but our work has shown that once you have one wave of inflation, historically, we've looked at 24 countries over the last 100 years, the chance of getting another wave of inflation are about 9 and 10, 90%.
Is that like workers catching up? Demand more.
That's a big part of it. And you've seen that recently in the U.S. with labor unions. Boeing, Machinist Union just got very big pay concessions. Longshoremen's Union did that as well. But I'd also add to that deficits, as we mentioned before. I'd also mention that I do think the pace of de-globalization is going to pick up. And that's another, I would say that's another moving part.
I mean, that's a huge Trump factor as well, isn't it?
It is. And I think in some ways this election was, to a certain, I don't know if investors would necessarily or voters would necessarily express it this way, but a little bit of this was really about the pace of globalization or the pace of de-globalization. The funny thing is in the U.S. there's very few things Republicans and Democrats can agree on. But one of them they can agree on is that China is seen as an unreliable trading partner at best. At worst, in some quarters, it's seen as an enemy or something. I don't know if I'd go that far. But there's certainly going to be much more scrutiny on China, and that has bipartisan support. The problem with that, of course, is it's more expensive, right? I mean, China is the low-cost producer, and we've benefited through low inflation. Consumers in the U.S. have benefited through low inflation for a long period of time. But there's also been a cost to that in terms of manufacturing jobs and all the rest of them. So Trump represents, we'll see what happens, it represents perhaps a rebalancing of that calculus.
So if you were to trade that, would you look at, say, U.S. manufacturing as a new a trend, or what would you look?
Yeah, I mean,
to invest in?
the things that we particularly like would be, we would say, infrastructure stocks in the U.S. There's still a fair amount of those. Industrial stocks. I would say aerospace and defense companies. Unfortunately, I think defense is a global growth industry. I know Korea has a lot of.
Yeah, Korea's really pushing it.
They're really pushing it, and they're very good at it. And you're seeing it in Europe as well. And to me, those are kind of particularly good places to look. I also think in the U.S., one way to look at that in terms of de-globalization is really there's going to be a much bigger focus in the U.S. on developing energy and actually making it available for export. So particularly liquefied natural gas. There are bans on exporting it in the U.S. right now. That will go away in a Trump administration. Okay. So not only will we take more advantage of our own natural resources, there's going to be a focus on making it available for export.
Well, if you don't get a tariff slapped on it.
Yeah, well, that's it.
Yeah,
we could talk about. I know I know quite a few of the Trump economic team quite well. Interestingly enough, none of them are big tariff people. Okay. So
I was going to ask you what's going to happen.
Yeah, no, it's interesting, and we could say this is it's a kind way of putting it, but I do think this is true. Just as somebody who knows these people and has met the president a couple of times on these issues, President Trump. I think it's important to remember he's not an ideologue.
Okay.
He's not an academic. He's a commercial real estate guy from New York. So he's always negotiating.
Okay.
Right. And from his point of view, tariffs are a negotiating.
Okay.
They're a They're a deal point.
Okay.
Right. And from his point of view, the U.S. has the biggest consumer spending base in the world. And why would you give that away for free if you didn't have to?
Okay.
So there were people like Larry Kudlow, who was very close to the president, who was the president's former national economic advisor. He was really focused on reciprocity of tariffs, which is to say that if China slaps a 20% tariff on something, we slap it. What would be harmful, and what I would argue if I were in a position to be advising them, I would really try to stay away from broad-based tariffs on everything.
Okay.
That would be inflationary. If you're just putting tariffs on things that where there's another alternative, it doesn't necessarily have to be inflationary. It could just be a shift in relative prices.
He does seem to have talked it up a little bit in advance of the election, doesn't he? Do you think it would be possible to back away from it a little?
Listen, I think, again, Donald Trump is a pragmatist. Okay. And I was in a meeting with him once where he said, I don't want to be the next Herbert Hoover.
Okay.
So he's aware that these tools can be harmful. And I don't see him risking a recession just for the point of slapping tariffs on China, let's say. I don't see that happening. But I do think he's of the view, and I think more than half the country, I think, seems to agree with him, that the U.S.'s trading relationships are, at this point, not appropriate for the times that we live in. Which is another way of saying, it's a fancy way of saying that, for a long period of time, we didn't mind necessarily giving up some advantage that we had, basically to ensure there to be peace in the world. And now there's a sense that they've become unbalanced, in which we're hurting our own people more, particularly people in the middle part of the country and manufacturing areas of the country, which haven't necessarily seen the benefits of globalization like people on the coast have.
Korea is a very important example there, I think. Korea's benefited from this security and trade umbrella with the U.S., and so there's naturally going to be some worry here.
I think it makes sense to worry. I mean, it's appropriate, but I also would say, knowing what I know, I would say, again, this is part of a negotiation.
Okay.
It's not necessarily a done deal.
So can I just jump back to something?
Sure.
We talked about big US tech just a little bit ago. A lot of Korean retail investors are really fond of the Magnificent Seven, like Nvidia, Microsoft, these kind of companies. Do you have any specific take on that group or?
Listen, I think I don't want to conflate the Mag 7 with AI, but I will to a certain extent because there's certainly a strong AI tie-in there. I think that artificial intelligence will continue to be a major theme driving markets. I mentioned our ETFs. One ETF we have is the Strategas Macro Thematic Opportunities Fund. One of the big themes we have in there is artificial intelligence. And that's largely because you're at a point in that cycle now, the capital spending cycle, where CEOs will be at greater career risk if they don't spend enough on artificial intelligence rather than too little. Okay, so people, boards of directors and shareholders will forgive you if you spend too much money and it winds up being a bad investment. They will never forgive you if you don't spend enough on it and you lose market share.
It's like the internet in 1999.
Yeah, precisely right. And so, eventually that ends, but right now, I think it's all indications are that it's very premature to call an end to that.
Part of the Trump trade, so I'm jumping around a little bit.
Sure,
it's been a bet on the dollar. And after he won, the dollar did jump. And here I am in Korea looking at the Korean won US dollar exchange rate. And wow. I mean, do you see dollar strength continuing, or what's your view on?
It seems likely, especially because I have to say, in my opinion, it depends on what you're talking about. If dollar strength versus other fiat currencies, absolutely, and it's also because I have to say I'm somewhat skeptical that the Fed is going to ease as much as the consensus does, and that's because of my views about inflation. So I'm not so sure we get to. I'm not sure where the futures stand right now, but at the start of the week, there was an expectation that the Fed funds rate would go below 4%. At the same time, you would have big earnings gains of 15%. That's nirvana for equity investors, but that generally doesn't happen. One thing happens or the other. So I think the dollar will stay strong, mainly because the Fed may not ease as much, and this may be especially true since President Trump was just elected. But the dollar is weakening versus goods. I mean, it is. It's weakening versus gold. It's weakening versus other goods and services. So I think the Fed is going to have to pay close attention to that.
Okay. Any possibility of a Plaza Accord 2.0?
Well,
would Trump be amenable to that?
Not right. It's certainly not right away. I mean, there was a Treasury Secretary in the 70s under President Nixon was by the name of John Connolly, and he said, the dollar's our currency and your problem. And a very American way of putting it. And I have a feeling for the time being that would be the Trump administration's attitude towards the dollar. I think it would have to strengthen a lot more from here for there to be some sort of concern or some sort of discussion of another Plaza Accord.
Okay. If so, then that's definitely Korea's problem.
Okay.
Also in the same neighborhood, China, US-China relationship, how do you, I mean, it's a slightly more geopolitical question.
Listen.
How do you view the relationship?
I think
Jinping?
It's more fraught than it has been in the past. I do think that, as I said before, I think there's more bipartisan support of being harder on China than there has been in the past. And I think among investors, I sit on a number of investment committees, and I find that there's an awful lot of people that are cautious about putting more money to work in China. Okay. People view it as perhaps a good way to speculate on short-term movements, but I don't see a lot of, let's say, as we call it, long-only money that's making additional long-term investments in China.
I mean, it's essentially a political bet, isn't it? Like you're guessing what Xi Jinping's going to do, right? And that's a tough one.
It is a tough one, of course, right? And that's precisely right. You want, and of course, all of it, we're all part of, in some ways, we're all Keynesians now. We're all having to focus on what governments are going to do. I think in China, but it's at a different level, of course, right, where there are certain questions about property rights or what you own, the VIE structure, all of these other things, right? Where
Alibaba stock.
So what do you really own as a shareholder? Do you
Mm.
own a claim on real assets, or do you own, some sort of piece of paper in a safety deposit box in Singapore? It's hard to know.
I have to ask you, do you have any particular view on the Korean economy or Korean stocks for the benefit of our?
I have to say I would be lying to you if I had a strong opinion. As I do know in the Korean market there is a strong aerospace and defense industry. I know that's and to me, as I said before, that's one place. I'm looking globally at aerospace and defense companies as being sadly a beneficiary of the new world that we live in. That's true in the U.S., true in Europe, also true in Korea.
And emerging markets generally, is any?
I'm more focused, given my views of inflation, I tend to be more focused on emerging markets, and I don't necessarily put Korea in this camp because it's just a different type of economy. But I'm probably more focused on emerging markets that are net exporters of commodities as opposed to net importers, right?
Okay.
So it would be, in the old days, it would be, Russia and Brazil. Russia's kind of off the table, but it's, Brazil would be one. And I'd be a little bit more cautious on importers, and that would be particularly China, of course, right? And maybe to a lesser extent India as well.
Yeah, I know a lot of Korean retail investors are very interested in India as well. How about Indonesia? I mean, is that a focus here?
I don't know anything about Indonesia. India, though, I think could be interesting just to the extent to which there's going to be a lot of U.S. manufacturers that are going to look, I think, to expand their supply chains, or they may be longer, they may be more expensive, but they want to diversify them away from China.
China de-risking.
Yes.
That you may or may not wish to answer. There's an article in the New York Post a couple of weeks ago. I think you know what I'm going to ask you. Saying that if Trump wins, then it's possible that you might be in line for a big economic job, particularly head of the National Economic Council. Care to elaborate? This may be your first interview since the election.
Listen, if I were asked, that's a big job, and if I were asked, of course, President asked, you kind of got to do it, right? I think, but I would say there's a lot of competition for those jobs. There's a lot of great people out there, and so I'm very happy with what I'm doing right now and running Strategas, and so if that comes to pass, we'll make a determination when that comes. But if I were asked, I'd be honored to serve.
If I may, one final question.
Yes, sir.
Now, before you started your company, you had a long career on Wall Street, I believe, and you've detailed your life there in a memoir. Can you tell us about that, please? Yeah,
I mean, it's maybe it's a little vanity on my part, but I'm a big reader, and I love to write, and so I travel a lot, so I accumulate a lot of stories along the way, and I also feel pretty strongly that Wall Street is a noble profession, or it can be very much a noble profession. And when I wrote the book, that was in 2015. That was in the aftermath, obviously, of the financial crisis, and I think there were a lot of people that tended to view Wall Street like the movie The Wolf of Wall Street, which bothered me because I know living in New York and having worked on Wall Street for over 30 years, I know there's just so many good people that take the subway to work every day and just trying to make the mortgage. And so the book was really about just kind of not knowing what Wall Street was when I was in college, to learning about it, loving it, and building really my career around it. And then towards the end, I talked about other things that were going on economically that I thought were important. But it's kind of a love letter a little bit to Wall Street and how it can be. One of the more, I find it, at least doing what I do, which is economic research and going around the world talking to people like you and talking to other investors around the world, it's a very rewarding business. It can be very humbling business because you can be wrong quite and publicly wrong. But it also, that's what makes it interesting. That's what makes it always up for debate.
Well, as long as you're right 51% of the time, isn't that
exactly? I think you have to admit the main thing is you cut your losses short, right? When it's not going your way, you admit that you were wrong and you move on. Right. You don't. Whether it comes to political forecasting or economic or financial forecasting, I found that the thing people will not forgive is you insisting that you were right all the way along, or not admitting when you were incorrect. I think people have a very short tolerance of that, as they should. And I wish there were a little more humility this week and when it comes to political forecasting. There's a lot of people got things wrong in the United States, but it doesn't seem to stop them.
Yeah, it seems to be getting harder as well, doesn't it, to forecast things?
I think so. I think there's in the U.S. There's a couple of things going on. One is that I do think the cell phones I think make the polling business much harder. That's one thing. I think the second thing is that there is a not insignificant portion of the population in the U.S. that is less trusting than they used to be. Okay. So the concept of telling a stranger
what you think about politics.
What you think about politics is kind of kind of off the grid.
It's so divided now, isn't it? That if this person asking me has a different opinion to me, are we going to end up arguing? Or
sadly, it never really used to be that way. And Trump, I have to say, President Trump, brought that out in people. And you could say it's his fault or it's his detractors' fault, but. When he became president, I think it was such a shock to people that the divisions in the country, got much wider for a time. I'm hoping with the election results this week, I'm hoping that people get a little bit more together. But President Trump won both the popular vote and the Electoral College. It won it by a pretty good margin. And so I'm hoping everybody relaxes a little bit and we'll all try to get along a little bit better.
Okay. If I may ask you,
sure.
In Korea, what are you hoping to do with Strategas in Korea? You're hoping to attract more like institutional clients?
Yeah, it's
retail?
It's a little bit of a hybrid. We have a new associate with Beyond Park. We call her BY, and she's very well known in this country. She's spent a career here. She recently just joined us, and so we're working with institutional investors to hopefully distribute our research and get paid for the research. Also thinking about working with individual and retail investors too. I mentioned the ETFs. It would be nice if we could get some assets under management there. But we're looking to find clients that would want to work with us or partners that might want to represent our work.
Okay. One final question, if I may. This is it's pie in the sky kind of stuff. Any projection on the S&P 500 for this coming year?
Yeah, listen, I think I would take low single digits, less than which frankly is often forecasted and rarely happens. But I don't. And that's mainly because I think it's going to be very difficult to get multiple expansion given where we're starting. We're starting at 22 times forward earnings. Yep. And so if you think earnings will be up 10 as I do and you have some multiple contraction, that gets me into kind of the single digit idea. So maybe 6,200 on the S&P 500, something along those lines. Nothing that exciting, but there'll still be opportunities to make money.
I mean, ultimately you need earnings expansion to drive the stock market down.
You really need multiple when the markets really are cooking, you get both earnings growth and multiple expansion at the same time. And in my opinion, you're probably going to have more earnings expansion than multiples from here. Okay. So it's unlikely to get big multiple expansion from here.
How do you see U.S. productivity?
Yeah, I mean, listen, it's subpar. I mean, it's not what you want. I mean,
compared to my country, it's amazing.
Yeah, it's there's the possibility here. The possibility in the U.S. is quite large with artificial intelligence. Although I would say a lot of that is kind of in the future, and we don't quite know how productivity enhancing those things will be. So I think that I'm hopeful that productivity and will be on the rise. One of the problems with QE, in my opinion, is that there's a lot of companies that focus more on financial engineering than actual investments in their own business, capital spending. Artificial intelligence is something a bit different, in which the companies are spending a fortune. So,
okay, all right. Thank you.
Thank you.